Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, the India's sugar prices have been rising for the past 3 weeks now, and the prices have gained up by around 7% in the same time. And they're expected to rise further amid strong demand and limited availability in the markets. There are other factors as well that are impacting prices. For instance, the rise in ethanol production, Brazil ending its tax exemption program for ethanol, and higher demand coming in from China and Europe. To discuss the outlook for sugar, we are now joined by Gurdev Gill. He's agricultural options broker at Marex, and Mr. Atul Chaturvedi is executive chairman at Sri Renuka Sugars. But even before we talk about sugar, gentlemen, the Indian Meteorological Department now has forecasted a normal monsoon this year, with rainfall expected to be 96% of the long period average. However, the El Nino effect could have some impact in the second half of the season. So my first question is going to be on monsoon itself, Mr. Chaturvedi. You look at various crops and various commodity prices also. What does the IMD's first official forecast mean to you?
Manisha, thank you for having me on your show. At this point of time, I would not put my money on whatever the IMD has predicted. As a matter of fact, what is most important from our perspective is the spatial distribution of the monsoon and how it is spaced during the season. So we'll have to probably see how things pan out, because one meteorologist has said that 94% long-term average, and now IMD says 96. We are not sure as to which one to believe. So we would much rather not hedge our bets as of today and wait to see how things pan out, because what we've seen is lately there have been reasonably good rains in Karnataka and parts of Maharashtra. So whether that is a reflection of state of things to come, we don't know as yet.
Oh, well, absolutely. Too much rain, too less rain in various parts, but the final number comes out to be positive. But that, as you rightly pointed out, the spatial distribution, the monthly distribution is equally important, and that is what the street will keep an eye on at this point in time. But the kind of weather that we have seen in the last 3 or 4 months clearly has impacted lots of crops, sugar being one of that. And I'll start with what's happening in the global markets first. And Dev, this one is to you. 6.5-year highs for the raw sugar prices. The white has been jumping up as well. What is it that you see as factor supportive?
Thank you again for having me on your show. In terms of the wider sugar environment, we were already in a deficit last year. There was an assumption that we weren't, but that was actually powered by destocking. And that destocking has really come about and presented itself with a serious problem at the at places and countries that need it. So during this restocking process, we found that actually there are very little in the way of stocks around the world. And also we found that with India, for instance, pegged to be 35 million tons, turned out to be, in our estimates, 32.2 million tons. Thailand was pegged to be around 11.7 million tons, turned out to be 11 million tons. And then you have, disappointments in other parts of the world, Sudan, Egypt, the European Union, and so on. And that has really driven a fundamental shortage, which has really, rationalized prices going up in the way that they have. Exogenous inputs on the macro side are a little bit more nebulous in that, we have recessionary fears. We have a dollar that's trying to understand whether it's a function of rate rises, which are towards the terminal rate, or indeed a flight to quality. But all things considered, the fundamental bias is where we believe the kind of major factors driving prices are taking us to.
Yeah, Dev, we are already 23 above is where we are trading right now, 6.5-year highs. As you mentioned, all fundamentals seem to be supportive. Is it also to do with the way the money managers are now looking at agriculture crops, including sugar?
Certainly. In the last Commitment of Traders report that we have, it was over 208,000 contracts long, but we're notably over 100,000 contracts away from the historical highs. And again, another element that may be important is that they're not as long as some had expected. And as of, again, the last Commitment of Traders report, there was a considerable amount of commercial buying. So again, coming back to the fundamentals of where we think prices are and why we think prices are here, it is really due to restocking. We think there is a lot more restocking to do. So a culmination of additional speculative buying from the money managers, as you say, and also from people who genuinely need that sugar. It's not a speculative view. Will take us higher still.
Absolutely. And you mentioned India, and Mr. Chaturvedi, the Indian prices also seem to be rising. There's a lot of demand, supply not so much. We've seen what's happened in Maharashtra and Karnataka. Where do you see the sugar demand, sugar prices moving ahead?
Well, in fact, the sugar demand within the country is reasonably strong. And there's no reason why Indian values should not start inching up. I'm using the word inching up for the simple reason that Indian values cannot move in tandem in the same proportion as the world values because India is a highly insulated market. But definitely the effect is there. And what we are seeing is it's gone up by about 6 to 7% in the last week or 10 days. And there is still some potential for it to go up. So at 35, 36 rupees, I don't think it's an expensive buy for an Indian consumer. And a couple of rupees more going up, I don't think too many eyebrows will be raised as far as the decision makers are concerned. So it's a good time.
For the industry, yes. Mr. Chaturvedi, the concerns really are as we move ahead from here as well. And I know it's I'm preempting when I'm asking you that, but the markets and the industry participants, more and more whom I talk to, tell us that from next year onwards, as you see more divergence towards ethanol, and weather will always be an uncertainty, and the sugar demand within India also hitting record highs. There are numbers of 27.5 and 28 million tons. What are we headed into as we move into the next season?
Well, in fact, my take on this is that if sugar production in India drops a little, then the first casualty will be the exports. This year, India has exported 6 million tons or 6.2 million tons. Next year, if our weathermen are proved right and El Nino has its effect and our cane production gets into some kind of a trouble, then I think the first casualty would be definitely exports. Second, in my view, if there's a massive disaster, then possibly ethanol also could come into some kind of trouble because there's no reason why Indian policymakers would not look to cushion the Indian consumer. But I think it's a little too early to start talking on those lines. Next year also, we are not seeing the Indian production coming down all that much because I'm also getting a lot of reports which say that Karnataka rains are going to be reasonably good. And in areas of Maharashtra, which are closer to Karnataka and much more sugar producing area, that area is going to get good rains. Even both the meteorologists, IMD, as well as the other one, SkyMet, they have both said that this region should get adequate rains. The trouble could be actually in northern India and maybe parts of central India. So I don't see this too much of a problem as of today.
All right. Not as much of a problem right now, but they've, we're not exporting too much right now. And as Mr. Chaturvedi said, if there's an issue, then exports is the first thing that gets cut off. How are the international markets watching that, one? And two, what's your sense on prices from here? We're trading above 23. What is the range you're working with?
Sure. In terms of our Indian number, we have projected 3 million tons of exports. We're pretty punchy in terms of Indian domestic consumption. We're higher than most other estimates at 28 million tons of consumption. We're also tight on closing stocks at 5.7 million tons. So we believe that the markets and indeed the government of India will be watching to see what plays out and not make any quick moves, shall we say, to license exports in large sizes. And again, as they have always done, they'll be watching to see what the comfortable sort of surplus, if any, will be for next year. And Mr. Chaturvedi, very fairly pointed out, weather has been a big flag in quite around the world, and India with the monsoon, El Nino, and how that plays out state by state. India really is a huge country, which is, you can't just say a monsoon is good or bad, or there is a huge amount.
Absolutely.
So yeah, in all, we are positive on prices with that tightness and that timing, and we see prices considerably higher than the current price of 23 cents still.
Are you willing to put a number though? I mean, are you looking at 24, 25, 26?
Sure. We think that fundamentally, again, May contract is not that long to expiry, but later on this year, we do think that the market could touch 27 cents. Sure.
All right, so 27 cents in the international markets. Fundamentals are strong, and the Indian demand quite on the stronger side as well. Well, that's about sugar, where the industry continues to do well. And as Mr. Chaturvedi said, this is a sweet spot that we are right now as far as the mill is concerned. Thank you so much, Dev and Mr. Chaturvedi, for joining us and telling us all about that sugar and the forecast therein. Time for a short break, but coming up, we shift the focus from sweet to spicy. A discussion on the spike in prices of cumin and other spices with Swani Spice Director Harjeev Swani on the other side.